Hi, I'm Brad Rosley. Thanks for tuning in again today. Very excited to talk to all of you today about 3 ways to invest $1,000. I was reading my book again over the weekend, Beyond Money, and the first chapter was about life lessons and money has a purpose and how it's just a medium of exchange. And then we go on to talk about a little bit about budgeting and cash flow. But once you've figured some of those things out, it's time to start saving or possibly even investing money. So I'd like to jump right in, and I'm going to give you 3 ways to invest money. The third way is one of my all-time favorites that I've been using for a long time, and I'd like to make sure that you stick around for that one because it's easy and it can make you a lot of money over time. First way I want to talk about is you can invest in the stock market now. It's easier than ever. As a certified financial planner, I talk about stocks and bonds and investments all day long. And most people don't think they can afford to invest in the stock market or don't know how to. So today I'm going to give you a few ways to do that. Believe it or not now, you can go online and set up a brokerage account and have no minimums and no trading fees. Years ago when I started in the business, you'd have to go to a Merrill Lynch or something like that. You'd have to have a large minimum, maybe $10 or $20 or $50,000 to invest. And every time you made a trade, it might cost you anywhere from $20 to $150, depending on the stock you were buying, what market it traded on, what exchange it traded on, and how many shares you bought, if you bought a round lot or not. Well, the great news is that's no longer the case. Technology's been our friend, and competition has driven down prices down as far as they can go. Zero. You can now buy and sell stocks or mutual funds or exchange traded funds for free. A couple of places you might want to go. You can look up something like a TD Ameritrade. TD Ameritrade and Charles Schwab, which are going to be combining forces here shortly, now offer no commission trading. You can go online, set up accounts, move money in there, and start investing right away with no minimums. Another company I've heard about that's done some good things is one called Robinhood. Again, now a lot of these companies have apps, and you can go right on your phone and you can move money from your checking account right in to your brokerage account. And once it's there and the money's cleared, you can go ahead and make a trade. Now, for many of you who don't know what you're doing or would like the idea of a nice broadly diversified portfolio of stocks, you can make it really easy. You can buy a mutual fund called an index fund or an ETF, exchange traded fund, that owns a broad variety of stocks. For example, the Standard & Poor's or S&P 500 is 500 of the biggest companies in America. That's an easy place to start. You don't have to overthink it. You'll do just fine from a stock standpoint if you invest there. Now, if any stock investment, I do not recommend that you think of it as trading. I'm not a fan of that, even though it's free, and you could do that. I'd rather you think of an investment as long-term. Long-term meaning at least 3 years, possibly many years longer than that. I know that, for example, recently I opened up TD Ameritrade accounts using a Roth IRA for my 3 kids who are all in college. One of them bought shares of Tesla, one bought shares of Amazon. Back when it was $499 a share, I gave them each $500 for the Roth IRA. The $499 Amazon is now worth over $1,800. And one of them bought stock in Starbucks. So they got a great exposure to pick their own stocks they wanted to buy. And now they've started to add some of their own money as they're making some money in their part-time jobs to add to that account and get more actively involved. So that's the first place. You can do now a brokerage account on your own and start becoming an investor. The second thing I'd like you to consider is something else I've done for myself. I started 2 years ago. I've got a video on this as well with a company called Acorns. There are other ones in this space, but what they do is They're most known for allowing you to either invest a lump sum of money into an ETF portfolio, a monthly amount automatically, or I should say, rounding up all your credit card or debit card purchases into your account. So very simply, if you bought something for $4.50 and you use your debit card at the gas station, they would take 50 cents from your checking account and put it into your investment account. They round up to the even dollar. As a matter of fact, they give you the option to double or even triple your roundups. So that's another way to systematically add money to your account. And with those accounts as well, you could put in your whole $1,000 lump sum. They ask you some questions about your risk and your goals, and they will recommend an investment portfolio of exchange traded funds where your money will automatically be diversified in a well-diversified portfolio. This is another terrific option. You could do both of these. I've done both of those. As a matter of fact, with my Acorns fund, when I started a couple years ago, I set out with a goal. And my goal was in 3 years to have enough money on there to make a serious dent on a family vacation to Europe. Well, this many years in, I'm up to over $3,400. I'm not all the way there yet, but I'm still a year away from when I want to take that vacation, and I'm pretty confident I'm going to be closer to $5,000 by then. And that's going to really help when I go on this vacation. You could use this money for anything that you want. It's liquid. You can take it right back out if you choose. I'm doing it because I had a goal in mind. Like, I attach all my money towards financial goals. I suggest you do the same. The last way that I'm going to suggest you do this and save in the stock market is something I've used near and dear to me now for as long as I've been investing. It's called dividend reinvestment plans. I first heard of them from my grandmother, who lived in Cincinnati. Cincinnati was important because she had used a dividend reinvestment plan with Procter & Gamble stock and Exxon, as a matter of fact. But Procter & Gamble, P&G, his home base is in Cincinnati, so I'm sure that's why she got it. And she ended up, when she passed away, giving her daughter, my mother, quite a bit of that stock, and she gave a little bit to me and my sister as well. I said, boy, this is a neat idea. So how does this work? Well, I use a company called Computershare, which shows you a large list of companies that allow you to do this. And what you end up doing with these dividend reinvestment programs is you buy stock directly from the company. There is a nominal fee attached. Usually it's a couple dollars per purchase. But you could invest your $1,000 into one or more of these companies. Now, these do generally have a minimum depending on the company. I've seen many of them at $250, some at $500. I've been doing this now for a number of years. I did it long ago. I remember I had stock in Walgreens, I had stock in Home Depot, and I did that for quite a while. I ended up taking the proceeds of that and using it towards paying the cost of an addition on my home, which helped quite a bit. More recently, in the last 5 or 6 years, I've been buying a lot of Microsoft stock, which is I've done now for the last 3 months, and before that, Intel and McDonald's. So literally, when I look at my statements that I get from them, this is my McDonald's statement, okay, I put $200 a month in McDonald's. Every month it gets pulled automatically from my checking account. That's what it takes, in my mind, to grow wealth, is systematic investing. Now, after doing this now for a number of years, I find that my balance is up to $34,000. Well, I buy $200 a month. Of that, they take out a little bit out of every purchase. They take $2.60 is their fee. Now, McDonald's pays a dividend. A lot of these companies do pay dividend, larger companies. The dividend, when you have a dividend reinvestment program, this which differentiates it from just at a brokerage firm. You buy fractional shares as your dividend gets reinvested. These companies pay quarterly dividends. So for example, McDonald's, the dividend I got in McDonald's last March was $187. The stock price the dividend was $197, and the stock price was just less than that, so I bought more than one share with just the dividend. That happened 4 times throughout the year. So I bought 4 shares of McDonald's this year, with my dividends, over $800 in dividends. It slowly grows. It doesn't start out to be a big deal. For example, on my Microsoft, I just started that, and I'm putting in $300 a month. So I've done it for 3 months. I now have $900 in Microsoft stock. $900 in Microsoft. Okay, I'm just getting started. My first dividend with Microsoft was a whopping, where is it? A whopping $2.16. Big deal. But guess what? A year from now, that's going to be a lot more. 2 years from now, even more, etc. I attach this to a goal. I've got 3 kids. I've got stock in Intel, Microsoft, and McDonald's. My idea for a goal for those is going to be to give my children a wedding gift. Like I said, my kids are all in college, so hopefully that's far away. I'm not going to use it all for that. I'm going to have more than I need. But the idea is I'm systematically saving. I started off with $100 in each, and then I slowly bumped it up to $200, and now I started a third one with $300. This is how we systematically build wealth. You don't start off with a lot of wealth. You have to grow it over time. So again, I gave you 3 ways. One is a commission-free trading at a brokerage account that you can set up online. 2 was a free app called Acorns. I do believe Acorns charges a $1 a month fee. Or 3 is the dividend reinvestment programs. Again, I used a company there called Computershare. So these are 3 ways to get started with a little bit of money. And I do believe, one last time I want to say, I do believe the key to success is to set up automatic investment plans. You can do this with any of these 3 places. Start with whatever you can afford and slowly increase it as you can afford to do so. I'd love to hear your comments about which of these is your favorite and if you're already using any of these. And if you have other ideas, feel free to share those as well. This is our way of getting successful over time. As a certified financial planner, it's my mission to help everyone get started towards the path of financial independence and financial success. Thanks a lot for listening. Have a great day.